Well, hey, you guys, it's officially April, which means it's officially tax season. And unfortunately, April Fools does not apply for taxes. And for a lot of people, paying taxes comes with a lot of uncertainty, even though we know it's coming the same time every single year, but there's still this element of unexpectedness to it, right? It's just like, oh my gosh. But from exemptions to write-offs to percentages, there's a lot that can change year to year. So today I'm telling you exactly what to expect. And stick around till the end because we'll go over all the nitty-gritty details and I'm sharing my number one tax season tip with you guys. So stay tuned. All right, let's start off with eligibility. So you only need to file your taxes if you're eligible. And whether you're eligible for filing a tax return depends on 4 factors. Age, are you above or below 65? Income, are you earning the minimum gross income? Filing status, are you filing as single, head of household, married, filing jointly, married, filing separately, or widow or widower? And dependent status, can someone claim you as a dependent? Or do you have dependents to claim? So once you've determined your eligibility and filing status, it's time to gather up all the tax documents. And not to sound like a total nerd, but I kind of like this part. Even if you don't understand every detail of the process, it's rewarding to organize your paperwork, give it to a pro or a tax filing service that you trust, and to check that part off your to-do list. Just feels really efficient and great. And by the way, if you need to get connected with a pro in your area or you're looking for an easy-to-use online tool, check out ramseysolutions.com/tax to find all the resources that you need. All right, here is a list of documents that the average working adult is required to submit. So your W-2, which is issued by companies to their employees on payroll. A 1099 issued by companies to contractors or non-payroll workers. Mortgage interest statements, investment income statements, and charitable contribution statements and receipts. If you've had a major life change in the last year, you are required to submit an 8822 form if you've changed your address, like if you've moved, an SS5 form if you've changed your name, a W4 form to adjust tax withholdings based on your new household income. And finally, if you are a small business owner or a freelance worker, you also may need a 1099-K. It shows payments that you received electronically, so like Venmo or PayPal, a 1099 NEC. It shows how much money you made as an independent contractor. A 1099 MISC, which stands for miscellaneous, and it catches any leftover money that you've made on other ventures. Okay, now that you have all your paperwork, it's time to choose between the standard deduction and itemizing. So tax deductions or write-offs lower the amount of income that is eligible to be taxed, okay? So it takes your income and it shrinks your income, so you're taxed on less of your income. So the standard deduction for 2023 tax year and the taxes that you'll file in 2024 is $14,600 for individuals and $29,200 for married couples filing jointly. So if your individual deductions add up to more of that throughout the year, then you're better itemizing. If not, you can save yourself the hassle of digging through old filing cabinets for receipts and all of this, and you can just take the standard deduction. So some common write-off opportunities that you may apply for are charitable donations. So you can actually write off if you've given your income to nonprofits. So be looking into that. Student loan interest, traditional IRA contributions, classroom expenses if you work in education, home office expenses or other self-purchased business expenses if you're an entrepreneur or run your own side hustle. Okay, so those are tax deductions. Now there's also tax credits, and that's another way to lower the amount that you pay in taxes, but they work a little different. So tax credits subtract the amount of taxes that you owe. So then rather than lowering your overall taxable income like write-offs do. So 3 common tax credits that people take are medical or dental expenses that exceed the adjustable gross income limits. The child tax credits for 2023, you can receive up to $2,000 per child under 17. And the dependent care credit, so you can receive up to $3,000 per dependent if you have to pay to take care of a child or an elderly parent who can't care for themselves. So the details of the tax filing process, again, they're a little tedious, but it's important to be vigilant. If there's just one thing that I want you to take away from today's episode, it's at the end of the day, you always want your money in your pocket. So if you're receiving a giant tax return every single year, it is time to reach out to your employer and adjust the percentage that they're withholding from your paycheck. getting money back after tax season. It isn't this cute little bonus or like this free money. Oh, it's so exciting. This was your money all along that was sitting in DC, not doing anything, where you could have been using that money to pay off debt or to use on a summer vacation or to invest it and actually make money. I mean, you could have used that money throughout the year and instead it was just sitting over there completely interest-free. And believe it or not, there's still more to learn about filing taxes, which is why I recommend if you have a complicated tax situation, work with a pro. There's a reason that people go to school for multiple years and to make it their entire job to help businesses and individuals with their taxes every single year. A pro is always going to know more than you and I do because we are not the overall experts, right? But they're here to make sure that we are giving the right amount of money to the government and keeping the right amount of money in our bank accounts. So to check out the resources that I mentioned earlier, so you have peace of mind, I will put them in a link below. So happy tax season, you guys. One of those adulting things that, man, we sometimes hate, but it's what we got to do. So do it right, because I don't want you to go to jail. So as always, make sure to take control of your money and create a life you love.